Hey there, this is Alex with Arch Public, and today I'm excited to introduce our newest crypto algorithm, the Oracle Protocol. The Oracle Protocol is built on the same foundations as the arbitrage algorithm for our familiar clients. For those new, it's built upon the ability to harvest and capture the volatility inherent in all crypto assets. So what I'm going to do is walk through a couple scenarios with you, and that should give you the best rundown on how to think about the settings here and tune it for your own portfolio. So to get started, I first set our chart to Bitcoin US dollar. I'm on the daily chart using Coinbase as the exchange. You can use any exchange you'd like. This is our Bitcoin cycle accumulation recipe for the Oracle protocol. You should see the settings on your screen here. What we wanted to showcase is how the algorithm behaves over an entire cycle. So the initial capital for all these examples is $100,000. This does not involve adding capital, which is much more realistic. Within this 4-year period or so, it's highly unlikely that you would have never added. So I look at these examples as almost the bear case, because once again, I'm not adding capital here when I probably would have added another 50,000 every year or so. So keep that in mind as we go through this. We started this example at a time of all-time highs, which, as you can see, this is October 6th as of recording. We are currently in a similar spot at all-time highs. Now, will we experience this downtrend, another pop-up, and then an actual bear market? Who knows? But I wanted to show you the worst case scenario, right? That we go through this downtrending multi-year market. So I'm pulling up the settings. I'm going to place it over my right-hand side. You can see what happens as we go through and change settings. To start with, for those that have used the arbitrage algorithm, you'll see a very familiar setting up here. This is our long and exit thresholds. For this example, we've set the long threshold to -5% and the exit threshold to 3.9%. For those new, what that means is on any candle that closes down -5% or greater, we're going to buy. And for any candle that closes up 3.9% or greater, we're going to sell that candle. For our cost basis section, as you can see here, the sell orders only happen above this blue line being our cost basis. And you can show this on chart. You can see this is checked here. So this ensures that when you sell, you're never realizing a loss on your aggregate position at any given time. A new feature for the Oracle protocol is the sell profit threshold. So what this does is it says, I don't want the algorithm to sell anywhere below 50% above my cost basis. This guarantees you, in this case, 50% or greater profits. This is a simple but very powerful tool, especially when we look at something like Bitcoin, where over many years we've been in a very strong bull market. This will guarantee a certain profit portion every time. Jumping down to something completely new is the dynamic position sizing. This is core to the Oracle protocol. This is what gives it its performance characteristics. As you can see here, we are on percentage rather than fixed, being what you've seen with the arbitrage algorithm. So percentage base says on these buy orders for the entry, I'm going to apply 6% of my initial capital. And down here, that has to be at least $500. On a sell order, it's going to be 1% or at least $500 of capital here. These parameters allow us to utilize our full stack and capture these lows at a good cost basis, especially here as we come back up out of consolidation period and we start to sell and create realized profits. These buy orders, because it's percentage based, are going to be much larger than these buy orders down here. Especially as we go further into time, your profits will become greater and the subsequent entries will also grow proportionally to these percentage values. This becomes a very powerful tool over a lot of buying and selling and over time. And once again, this is really what gives that boost to performance that you're seeing here. So that is the essential rundown of some of the new features here. And I'm going to start by tweaking some of these settings, and you're going to see how the performance changes as we tweak these settings. So the first setting I want to show is what happens when you tweak this sell profit threshold percentage. So instead of saying, hey, we want to guarantee a 50% profit, let's say in a cycle, you really want to capture highs. And I want to only sell when I've doubled my cost base, essentially. So we double this to 100. Now you see we removed all the sell orders here. Because we went through this bear market and exhausted our initial capital, those buy orders here also disappeared. You'll notice that the total P&L has increased to 164%. We are holding this position much longer, meaning we realize a higher profit up here. I can even take this all the way to 150% in this case, and you'll see we reduce our sell orders here even further, and we're now at 185% total P&L. You can really adjust this with a single number and create an entirely different scenario depending on what your needs and goals are. I think logically the next step in your mind might be, okay, if I'm selling less often at much higher prices, I want to take maybe more off the table. Let's say you really want to de-risk this multi-year investment. So coming down to the trade size percentage, instead of 1%, let's say we take off 20%. And you'll see we do drop the P&L here, but you'll notice the sell orders have changed. So if I pull the settings menu over, you can see the data window. Go to this double stacked object tree and data window box and select data window here, and you'll get to see all these statistics. My current cash is now $162,000. If I reverse this to 1%, I'm at $18,000 in current cash versus $162,000. I realize $108,000 in this scenario versus roughly $10,000 in this scenario. So obviously a big difference. This total P&L is not the end all be all of performance. If you require cash, then you really want to look at other statistics here, realize profit in this case, to really see the cost benefit of doing one strategy over the other. In summary, all we did is tweak two numbers here, this profit threshold, and I'm going to bring that back down to 50, and our exit trade size to change what this is capable of over an entire cycle without adding any extra funding to your account. So really powerful settings here that can tune to your specific needs with a couple short and small tweaks. Now, I've shifted to an entirely different strategy on the spectrum between accumulation and arbitrage, and this is much more arbitrage focused, and I would say to the very extreme edge of that. So with the Oracle protocol, we're able to actually create a full-on swing trader. And so if you're not familiar with what a swing trader might be, it is essentially buying the lows and selling the highs over big periods of price action. Bitcoin actually produces in this last cycle a very clean stepwise swing cycle. We go through the initial downswing, find our bottom, have our first leg up, consolidate for roughly 9 months, take the second leg up, drop down 30%, and now we're at all-time highs where we stand today. It's a pretty clean market to see how we can turn the Oracle protocol into a swing trader. So I've actually loaded in the settings for our recipe for Bitcoin cycle swing arbitrage. The settings that make this a swing trader are the sell profit threshold. I have this at 49%, and the exit trade size is set at 50%. So what we're doing here is every time we get a sell order, we're selling off half of whatever our accumulated position is. So we see this really come alive during this first leg up out of the consolidation of that long bear market here. And you notice that the cost basis line drops down, meaning we've sold off a lot of our position that we've accumulated down here. And if I move the settings menu over, you'll see as I hover my cursor over, you'll see current cash is at 0. And then we go through that initial sell phase and we're at $209,000 in cash. And we've realized roughly $130,000. Then the buy orders start to kick in. Again, we go through that second leg up and we sell again. and we're at $290,000, and we actually sold out of our entire position. You'll notice the cost basis line drops all the way down to zero, and we start to pick up and buy again at this 30% dip here. These buy orders are fairly large now. Over this bottom here, if I move this over, you'll notice that we are at 0.96 Bitcoin again, going from zero to almost an entire Bitcoin at this bottom here. The buy orders are much larger now because since we reduce our cost basis down to zero and started fresh, the algorithm has a lot more capital to play with. So it's taking $10,000 and applying that towards every buy order. And you'll notice that because we have that 49% sell profit threshold, we haven't sold anything off at these all-time highs. If the market continues to go up and meet that 49% or greater threshold, we will execute another successful swing trade. This algorithm is very different than our predecessor, the arbitrage algorithm. If you're looking for a long-term cash generator, this is an excellent setting. We can do this on more volatile coins, which produce similar results, but in basically a quicker, smaller time frame. So we explored the Oracle protocol for Bitcoin, which is a very trendy asset. We looked through an entire cycle from the previous highs to the protracted bear market and then back up to all-time highs at about 120,000. I want to shift over to Ethereum now, which is a completely different asset, not just from the name, but the price action. As you can see, I've loaded up our Ethereum volatility harvesting recipe that is in the case study. And off the bat, you can just tell how different this is from Bitcoin. This is not a trendy asset. Within this period, we've essentially ranged from, let's say, the low to mid 4,000s down to 2,000 and below. So very difficult asset to hold long term. There's a lot of people who've been holding Ethereum for quite a long time, and periods like this are very frustrating. At these highs, you are thinking you're going to break out and make new highs, and it ends up we barely crest over and then track back down, losing from 4,000 to 1,500, well over half from those highs, which is a very painful experience. And then to do this multiple times over roughly 18-month span is especially painful. With the Oracle protocol, you won't experience this sort of pain because we're not tied to holding the asset and never selling. With this volatility harvesting recipe, I think this really showcases the ability to apply that swing trading arbitrage strategy to an asset like this, which produces fantastic results. As you can see, we're a $100,000 account and we're up 140% on this. If I look over to my data window, my realized profit is 137. So we've actually realized most of this. This is really due to our exit trade size being 40%. Every time we sell, we're going to sell 40% of our position, or at least $20,000 in this case. So this is obviously much more swing trading, arbitrage style of an algorithm. If you want to deviate from the recipe and maybe develop more of an accumulation style strategy, maybe you're more of a long-term holder, you can do that. What I would do is start with lowering the trade size. What you're going to notice is you're going to notice a significant decrease in P&L, and that's because what you're really doing is you're really trying to set yourself up for a future that is not known. It's a little bit different of a mentality because we're not looking at these swings here. So if I drop this down to 10%, and drop the exit size down to 6,000. I still have a good gain, 96%, of course. As you can see here, if I move this over, we've realized 70,000. So we've roughly reduced our realized profit in half. We're now holding 15 Ethereum, valued at $68,000 currently. Another thing to notice is when we made those changes, you'll notice that the cost basis line has dropped dramatically. This definitely favors more of an accumulation style strategy. So if you're trying to tilt the scale towards accumulation, starting from one of our recipes, that's what I would start with, is reducing that exit trade size, reducing the fixed trade size down here too. You want to aim for a lower cost basis, of course, down near the lows. The last thing I would do is I could further reduce my selling by increasing this profit threshold here. So let's bring it up to 50%. And you're going to notice it's going to take some sell orders off the table. We do drop P&L a couple points, but now we've reduced our selling even more. And now we've realized $57,000 in profit instead of 70. So we're starting to trend down from a realized perspective. This is what you want to aim for if you're looking for an accumulation strategy. But as you can see, it only took me a couple minutes adjusting maybe 3 parameters on here to change this from a 140% almost all realized profit swing trading strategy to a strategy more attuned to accumulation over the long term. The last thing I'll add here is when you adjust those exit sizes down, what's going to happen is it's going to change basically the initial capital available to these buy orders here. So obviously with a dynamic strategy, there's a lot of knock-on effects here. If I move my cursor over to the right-hand side of that last buy order, what I'm doing is I'm looking at my current cash and it's at 0. So I know that I'm fully utilized down here. I actually don't have any more cash to add, which is what you want typically in a scenario like this. We ideally want to be fully utilized at the low of a move. And over here, if I look at this initial buying area, I should expect somewhere around the same. So I'm at 20,000, which is fine. If I increase the entry trade size fixed limit to, let's say 8,000, and I take my cursor over here, I'm at $240 in cash. So I'm fully utilized here, which is great. If I check back over on this second low area, I'm also fully utilized here. There's little tweaks you can do that will increase performance if you're looking for that accumulation style strategy. Within a couple minutes, you can completely change your strategy easily and seamlessly from accumulation to arbitrage and vice versa. Now with this recipe, you'll notice that I actually use a new feature of ours for the Oracle protocol, which is this buy below cost basis only feature. As the name implies, your buy orders only occur under your cost basis. So you'll notice there are no buys above the blue line whatsoever. This is very situational. This can really boost returns in some cases. And I think it works especially well for these consolidating, volatile, non-trending markets because price does tend to just continue to bounce up and down between certain levels. For long-term trending markets like Bitcoin, it's a little more difficult because you do want to probably buy, if you're a long-term holder, you do want to be buying some of those elevated lows that will be above your cost basis, especially if you bought really low in a bear market or something like that. Your cost basis is so low, if you have this checked, your P&L is going to be great. But if you have spare cash sitting there, you won't be able to utilize it deep into that bull market. If I uncheck this, let's note our P&L right now, so we're 92%. If I uncheck this, you'll see that the strategy has now completely changed. Cost basis has risen significantly. We're at a 56% P&L now, so it did drop significantly. But granted, if I were going to design a strategy where I do buy above cost basis, I would definitely change these parameters to fit this. Once again, this is going to be very situational. It works great in these volatile markets. It's a little more difficult to boost performance with this in a trending market. This video has gone on long enough, so I'm going to stop here. I hope you've gotten a deeper understanding of our Oracle protocol from this video, and we'll be releasing subsequent videos to dive even deeper and demonstrate the algorithm across various assets and other use cases as well. But once again, it's a fantastic algorithm for accumulation, for an arbitrage strategy, especially over long periods of time, and it performs equally as well with a quick change in settings for shorter periods of time and very volatile markets. So with that being said, we'll see you again.